Thanks for staying with us on Point. We continue getting reaction on that MPC decision that was announced a short while ago by South African Reserve Bank Governor Essaih Mhlanga. I'm now joined by Alexander Forbes Chief Economist, Essaih Mhlanga. Thanks so much for your time on SABC News. Just a quick reaction to that 50 basis point cut.
Look, I think given the reduction in economic forecast minus 7%, but also the revisions to inflation forecasts, it does make a lot of sense. But I think it is also important to highlight that in terms of targeting the proportion or the segment of the population that is impacted by the economy, monetary policy has a small ability compared to fiscal policy. But nonetheless, this is going to provide a lot of relief to customers or consumers that have debt.
Mm-hmm. When you speak about relief and providing relief, Governor Essaih Mhlanga referenced the US Fed and the ECB in terms of providing relief to countries and policy space available. He says when it comes to emerging and developing economies like ours, there's more of a challenge.
That's correct, particularly if you consider that we do not have a reserve currency, which is a currency which many other countries would like to hold because it preserves its value. The US Fed has the US dollar, which every other country holds in its reserves, which means over time it has the ability to preserve its value. And as a result, they can do quantitative easing or buying bonds directly from the US Treasury, which means they finance government directly. We can't do that, at least without significant negative consequences. But also, if you look in terms of the number of tools which they have deployed, which are targeted at specific sectors of the economy and specific population segments, we don't have that ability to do that. So we are limited, but also given that over a long time, emerging market, as the governor said, they have different types of challenges faced by advanced economies. What we have in SA is an increasing debt profile, which is going to be quite problematic in the future. And when inflation do increase in the future, if we raise interest rates, we will find ourselves in a environment. So that is why we can't do in the same manner that such as the US can do.
Okay. It's unusual times, obviously, because of the coronavirus, and we've seen the South African Reserve Bank, which is normally quite reserved, dropping interest rates to record lows, especially we saw that in April. Can we expect more of this type of reaction and behavior from the Reserve Bank and the MPC? And then going forward, at what point perhaps does this behavior and can this behavior stop?
I think if you just take the last statement or the concluding statements of the governor, he said monetary policy alone cannot fix South Africa's growth problems. There have to be economic reforms, there have to be fiscal prudence, there have to be a coordination of monetary policy and fiscal policy to solve South Africa's growth problems, absent of which we are going to have the same issues. And I think if you just look from a monetary policy point of view alone, we may be reaching towards the end of the cutting cycle, particularly if you consider in terms of the real rate, we are already in negative territory, just at about minus 0.6%, which is something the Reserve Bank has highlighted many times, saying they would prefer a real interest rate to be in positive territory, especially because we depend on portfolio inflows to fund our current account deficit or fiscal deficit, and it's quite difficult to attract portfolio flows with negative real interest rates.
Staying with that statement about what monetary policy can do and can't do, the banks eased regulatory requirements on banks and taken steps, they say, to ensure adequate liquidity in the domestic markets. Is this going to be enough to cushion ordinary South Africans from the economic challenges posed by COVID-19 and our situation before that?
In terms of cushioning ordinary South Africans, I think people that will benefit from interest rate cuts are those that have credits with commercial banks, but also those that are employed, which means they can access credit because employment is the first condition banks would require before they offer credit. But for those that have been unemployed for a very long time, I think that they will remain without access to credit. So those ones are not going to be covered, or they're not going to be held by monetary policy loosening, as we have seen. That can be done through fiscal policy, which has the tools to actually target people that are unemployed, people that don't have access to credit, which is why the governor said we need a coordination of fiscal policy and monetary policy, so that those that are not covered from monetary policy point of view, they will be covered from a fiscal point of view.
Okay, when we take a look at inflation forecast averages, he speaks about 3.4% for 2020 and 4.4% in 2021 and 2022. Also looking at core inflation lower this year, 3.5%. What are the risks to inflation now for South Africa?
If you just look from an inflation point of view, it's going to depend on consumer confidence. And in particular, consumer confidence will depend on two things which are unrelated to monetary policy or any economic policy, to be quite frank. One is job security. Given the expectations of a number of firms that are going to be closing shop and also shedding jobs, job security is possibly at its lowest in post-democracy South Africa. The second thing will be how consumers feel in terms of their safety for our spend. And if we just take numbers that are coming from other countries as far as COVID infections are concerned and death rates are concerned, and also take into account the estimates that came out of the Department of Health 2 days ago, they do point to an increasing number of fatalities and new infections. That would keep consumers unsafe or feeling unsafe. So that fear factor will keep consumers indoors, which means they're not going to go out there and spend their money. And in any case, we are likely to see an increase in discretionary savings, which means we are likely to see a deflationary environment going forward rather than an increasing inflation. But obviously, this depends how long the underlying healthcare problem will be.
So the governor also spoke about the depreciation of the rand against the dollar. I think he said 22.9%, and also the low oil price that we're seeing at around $35 a barrel. How did these two factors impact our money sitting at home watching this wherever you are?
From a currency point of view, it depreciated at its lowest 60% year to date, but it has since recovered somewhat. Oil price, they declined quite significantly as well, which means the rand price of oil is going to be a benefit. It's going to benefit consumers in terms of petrol prices, which we have seen, and that is going to be also deflationary. But as far as the currency depreciation is not a South Africa story alone. It's across many emerging markets as capital flights to safe havens, such as the US dollar, the euro, and into gold took place, and that is likely to remain with us for some time. But once we have some stability as far as the global pandemic is concerned, we are likely to see a return of capital inflows, particularly if you consider that our bonds, they still offer higher real yields compared to other emerging markets.
I know you've spoken about a lack of stability. That was also an issue that was raised, that forecasting is very difficult because of the many unknown factors in terms of health, social and economic impact. Do we have a time when we can say that the compilation of accurate economic statistics will be possible? And if so, when is that?
I think we will only know if it is possible once we have all clear as far as the infections are concerned. As it stands currently, given that we still have a lot of restrictions in terms of movements, even the Stats SA employees, which are tasked to survey economic statistics, can't move freely, but also the citizens which are surveyed and the businesses which are surveyed, they will not be welcoming easily because of the fear of infections. So as far as the underlying healthcare problem exists, we will have difficulties in the compilation of economic statistics, which is a problem because if you don't have accurate statistics, on what basis then we make economic policy. It becomes a guesswork, or it becomes quite difficult to make accurate economic policy in real time with inaccurate economic statistics. So this is a global phenomenon which many countries are going to face, but we do know that SABC has, at least on their part, tried to do online surveys using technology, which have given some indications of price as far as inflation is concerned. But as far as the other economic statistics, including GDP data, it's going to be difficult to compare.
Thank you very much for your time. That's all we have time for. Essaih Mhlanga, Chief Economist at Alexander Forbes, joining us via Skype there. Breaking news coming in: South Africa's COVID-19 death toll rising to 369. Flo Ledwaba is standing by with the SA Today team to take you through the rest of the afternoon with your breaking news. And we apologize once again for the quality of the sound.